All right, everybody. Welcome. Hope you all had a great holiday season. It is Thursday, January 4th, 2024. I had a good holiday with the family. I actually did a lot of work, got a lot of good stuff done, set up all the Owings market analysis indicators on Sierra charts, which I'm thrilled about. The capabilities of Sierra charts compared to TradeStation or really any other platform. It's just mind-boggling what you can do inside the Sierra charts. So kind of learning as I go here, but spent enough time with it over the holidays that I've got a pretty good lay of the land here. Let's go ahead and jump into the pre-market analysis, and we'll also look at some of the yearly and quarterly charts for the major markets to see what we expect for 2024. What do you expect? I'll tell you what I expect. Check this out. This is the E-mini S&P 500. I know everybody's getting very bullish up here. Everybody's excited. We're going to the moon, but maybe we're not. All right, take a look at this. Here's the yearly. You see how we're trending up, trending up. There's your pullback from 2022. There's your retest of the highs from 2023. You can see all we're doing is retesting those highs there. The trend run to the upside that we've been experiencing for the last several years in the stock market, it's grinding into a top here, right? Everybody thinks it's going to go higher. I don't think it's going to go higher. Not right now. Look at what you've got using OMA here. You've got a beautiful pocket resistance. You've got some strong trend lines coming in. This is setting up for congestion entrance to the downside like this for this year. Now, how far are we going to get? Are we going to get to the middle of the moving average envelope at 4,400? Are we going to retest the lows from last year around 3,600? That remains to be seen, but there will be a lot of pressure on this market as we can see on the yearly chart here. So be aware of that. Be careful up here. This is a very frosty area. You know, everybody thinks the Fed's going to cut. This market has priced in a massive amount of cutting. What if the Fed doesn't cut? This thing's going to drop hard and fast, especially because everybody is off sides right now. If this continues to drop, everybody who rushed in as this thing was pushing higher, they're going to have to bail on those longs. That's going to accelerate the move to the downside, and we could be in for a really tricky situation for those of you who aren't aware of what I'm sharing with you here, which is that you got to be careful up here. So put that in your pipe and smoke it. Be very careful at these levels for the stock market. Personally, I'm going to be looking for the short side. Doesn't mean we won't day trade from the long side and the short side, but from the longer term perspective, you got to be careful here. Look at the quarterly chart. Also, just a nice little flash up here. Beautiful pocket. A lot of resistance. This monthly here, you can see pushed higher. A little bit of a fake out. We're pushing back down now, which is what we'd expect off of that quarterly, yearly resistance. So very, very strong resistance here at 4,800 for the S&P 500 on the yearly, quarterly, and monthly charts. Let's quickly jump over to the weekly and the daily. You can see here on the weekly, that's silver. Let's go ahead and bring up the S&P 500. You can see with the ES here, you know, just a massive trend run up here on the weekly, right? Now we're entering congestion to the downside on the weekly, which is what? It's confirming what we're seeing on the yearly, the quarterly, and the monthly charts. We'd expect to enter congestion down on the weekly. The only way that's going to happen is if we get into a trend run to the downside on the daily chart, which is what we're seeing now. Now, we might bounce around up here for a little while. This thing's not going to go straight down. It just means that every time we retest these highs around 4,800, 4,850, you're going to see a lot of selling coming in. That's what the charts are showing us, especially the yearly and the quarterly chart. So more importantly, perhaps, is what do we expect for today now that we've seen a 3-day sell-off here? You can see selling off here on the daily chart, increasing volume. But I want to point out a couple of things, okay? We've had a pretty big 3-day sell-off. We do have a little bit of a flash pattern, which with the OMA methodology could definitely be some support here. We are at these lows here from a couple of weeks ago where we also found some very good support. And I want to point out here on the volume profile, this is what's very cool using Sierra charts. This is the composite. You can see the volume profile here in slightly darker shade of gray. Go ahead and draw it out for you guys here. You can see the profile kind of coming in right in here See how it gets very thin down in here, right? So what does this volume profile mean? Well, all these prices here, right? Most heavily traded zone here at about 47.80 and up here at 48.20. You've got a lot of trading, a lot of acceptance and prices according to the volume profile composite here. And what we're doing now is we're retesting the lower end, the low volume area of this overall zone up here. And this is where price skipped straight up and through last time and then served as support here as we pushed higher. So we're at that key level. You can see how the volume profile, when we match it up with Owings market analysis, is such a powerful way to get a very good forecast of what we think is going to happen from one day to the next. So what you can see here with all the support, this tells me one of two things. With this flash pattern, we could very likely see a bit of a bounce today. But I'll tell you what, if this market is under enough pressure to start collapsing through these lows, look out, because we don't have any support until we really get down to this high volume node at 4,700. Now, that's a pretty good drop from here. So I'm not saying we're going to get there today, but these lows from yesterday, which is what we're testing right now as we speak, as we do the pre-market forecast at 7:06 a.m. Eastern, these lows have got to hold. If we do not hold these lows, look out. If we do hold the lows, then we are going to probably push back up to about 47.70, that high volume node there. It's coming in where the near high is located. So it's going to be a volatile day. It's going to be a fun day because this thing is going to go big one way or the other. And I'm really curious to see how price reacts at this support level. Right now, it's not looking good. It's looking like it wants to maybe crash down and through it. We'll go ahead and look at the intraday chart here just quickly. This is what we're going to trade off of today together. I'm going to try and run the live trading today, maybe actually using the YouTube streaming. We'll see if I'm able to accomplish that with my limited technical abilities. But if not, I'll record my own trading for you and we'll start live streaming soon because I think that'll be a lot of fun. I've got some energy now that it's the new year. So here you can see this is the same daily chart we were just talking about to the left. And here is the intraday volume-based chart. I like to use 80,000 contracts for the E-mini S&P 500. You can see this is also a volume profile over here just for this period of time that we're looking at. So you can see we're coming into the low volume area here. And you can see those are the lows from yesterday, trending down, entered congestion up, slamming back down. So we'll see if this pocket here holds. You've got a nice extension here. Extend that out. You've got a lot of support here at 47, 42. This has got to hold. I'm going to be keeping a very, very close eye on that because that's going to be the key marker for today. If I see that level starting to hold at 8 o'clock in the morning when I start trading here in about 45, 50 minutes, and I see a nice pattern using OMA, I'll probably look to get long because this is where price got rejected last time. There should be a lot of support here. Now, do I know that there's going to be support here? No, I don't know that. If I knew that, I wouldn't be out here on YouTube. I'd be on my yacht hanging out, having a good day because I know everything, which I don't. So I've got to say the probabilities are that this support level is going to hold. But if it doesn't, that's equally important because it's going to go through that support level really hard and fast if it starts to break down. So one way or the other, we're either going to have a hold and a big move back up to 47.70. Could have a lot of people who are short now temporarily caught off guard, could get caught in a little bit of a squeeze, or the selling pressure could be so heavy that we're going to barrel straight down and through that 47, 42 level. And if that happens, look out below. So one way or the other, we're going to expect some good trading today, especially coming in with this analysis framework, knowing exactly what to expect. So that's the S&P 500. Let's go ahead and jump into the NASDAQ here. Go over, you got to give me some time. Bear with me. I'm working with the Sierra charts, which I love. Kudos to Sierra charts. Man, TradeStation really dropped the ball, They had they had the opportunity to, kind of also set up a similar infrastructure, but they're just dropping the ball with the volume profile and the time price opportunity charts and all that good stuff. So here's the NASDAQ. You can see ooh, This is looking ominous for the NASDAQ on the yearly. Really ominous on the NASDAQ yearly chart. Careful, careful, careful. Looks like this thing is going to drop. I mean, it's really looking like it. And everybody's so bullish right now. So you've got to expect this thing to drop. I mean, and the charts are confirming it perfectly. Quarterly, beautiful little exhaust up into this pocket. Look out below. I'm not going to go into too much more detail. It's the same as the S&P 500 that we just went through. Let's go ahead and look at the daily chart so we can look at the important zone for today. So here you can see the NASDAQ, to me, is looking more bearish than the S&P. I mean, this thing could fall straight through here. We'll see. We're at this low volume area. The NASDAQ, you can see if we start to chew through all this, we're going to drop hard and fast. So it's the same analysis for the NASDAQ as for the S&P 500 in terms of these lows need to hold. If they don't, look out below. That number there on the NASDAQ for today is about 16,500. That starts to break. Look out below. It looks like we're actually, kind of trying to start breaking below it right now. Let's go ahead and look at the intraday NASDAQ chart here. This is the daily, of course. Here you can see this is the intraday volume-based chart. I like to use 40,000 on the NASDAQ. And you can see it's a similar pattern here as the S&P 500. So we're challenging this low volume area right here. Let's go ahead and get our white pen. It's right here. I'm going to go like this. It's because I can't see because my mic is in the way. I use the keyboard hotkeys for the drawing. But here you can see the volume profile like this, right? So we're in this low volume area that's got to hold. We're challenging this support here. You've got a really nice extension here. Now, if this holds, then I would expect a move back up like this, and I will buy it if that holds. So I'm really just going to pay close attention and see what it looks like as we get closer to the pre-market open at 8 a.m. because at this point we've dropped pretty hard, pretty fast already, which is what we saw coming with the yearly and quarterly charts, of course, as I just outlined. But I don't know. Is there going to be a little bit of a respite today? We'll see. This, right now we're sucking up off these lows. So I say that support is support until it's broken. So if this support is holding, I'm going to have to buy it. But if it breaks, I'm going to switch bearish very, very quickly. So let's see about that. Go ahead and jump on over to the Treasury space. I'm not going to look at the Dow and the Russell right now. Let's look at this is the 10-year. The quarterlies have a pretty nice resistance pocket pattern here on the 10-year. If this exerts pressure to the downside here, that means that rates could continue to go up because these have also gotten a little bit ahead of themselves. If the Fed doesn't start lowering aggressively, these are going to be mispriced. They're going to drop and rates are going to go back up, right? At least the rates that the market is projecting. So that's not looking good for the stock market either. Let's go ahead and look at the 30-year quickly. 30-year, similar pattern here. I do expect this to be under pressure. Let's go ahead and look at the daily chart here for today. Here you can see, switch on over to the 30-year. We're going to look at the ultra bonds here in a second. Yeah, we're coming out of this. So this is, pull back here, trending down, pull back, pushing down. Looks like bonds are going to be weak today. Rates are going to be rising. So that might, be the catalyst we need to push stocks down and through that support level. We'll see. Right now, bonds looking weak. I will look to probably play the short side of bonds today. Definitely. Let's go ahead and look at the ultra bonds intraday chart here. Oh yeah, just getting smoked right here after the close. I'll be looking for any opportunity to short the bounces into the bonds. They have a very clear pattern, whereas the to the downside here on the daily, whereas the S&P 500 and the NASDAQ, really that support level needs to hold. If that support level starts to break, it's going to break hard and fast. It could go either way. We need to wait and see. Whereas bonds are looking very, very clear. Looks like they'll be under pressure, and shorting bonds is probably going to be a pretty good bet today. So that's what I'll be focusing on for sure, at least in terms of what I'm going to be doing with the treasuries. Let's go ahead now and look at gold, silver, and crude to wrap it off. We'll go back to our yearly, quarterly, so we can get a little bit of an idea of what we expect for gold. For all you gold bugs out there, oh, not looking good. Not looking good. Look at the quarterly here. Big push up. Beautiful extension. Nice pocket. Yearly's got one of these little sneaky patterns right here. I don't know. I think we're at least going to see some kind of a, temporary sell-off back down to 1850. Quarterly's in congestion here. Wouldn't be surprised to cycle back down here to 1850. Monthly's got a beautiful little flash pattern here. I'll go ahead and show you what that flash pattern did to silver. I think those of you who follow silver, you know what happened. Silver got crushed. And here we're seeing the same pattern here on the monthly chart for gold. Looks like it's going to be bearish. Let's quickly jump over to the weekly and the daily. Let's go ahead and bring up gold. That is the bonds. Okay, so gold here, weekly rolling over. You do have a little bit of a flash pattern into an extension here on big volume. But I don't know, the price is still accepted here, right? So I would think you're going to want to look for silver's a better price structure. I'll show you in a moment, but you've got this low volume area coming up here, probably going to be resistance on gold today, heading into about 2060. And then down here is probably going to be some support at 2035, 2040. Gold probably going to be messy today. I don't know if I'm going to trade gold. I'll follow it during the day, and if I see a great pattern, maybe I'll trade it. Like I said, if I'm able to get the live streaming figured out, we might do that together, or I'll film it and upload it for you guys later, my own trading. But gold is one to maybe stay away from. Looks a little bit conflicting because it's heading down, but you have a buy pattern, so you got to be careful there. But could be a lot of resistance up into that 2060 level where you have that low volume node. Let's look at silver. This is the one that I think is going to be the gift that keeps on giving. For those of you who follow the channel last year, as we started to post some videos, you saw that I hammered silver when we had that big drop. When was that? That was right in, it was, oh, sorry, I'm looking at the, this is the weekly, right? This is the daily. CR charts, I'm getting used to it. Right here on the daily. There, you go back and look at my videos. We covered this. This was just great pickings for silver to the downside. I think you're going to see continuation of a move like this. So you can see yesterday, silver just smoked that extension. Massive volume right there. You see that there, right? So looking at silver today, just looking at the profile here, I mean, it's an area of an acceptance temporarily, but look up here. There's just, this is a very low volume area. So I think you're going to see a lot of resistance on silver up into this, probably this low volume area here, 2340 or higher. I'm going to be looking to get short some silver, which will be fantastic. So silver on the short side, I like. Bonds on the short side, I like. Those are the two, markets that are the clearest for me right now. Gold, I'll keep an eye on, but like I said, we'll see. I'm more interested in silver and bonds. And the stock market, I'm going to keep an eye on because, if it starts to really break down through that support, we could have a runner and we get on that board, that trend to the downside. And looking at bonds, heading down, silver heading down, maybe a little bit of liquidity problems here. We got the bank term funding program ending in March. A lot of banks are in trouble. We had 3 huge bank failures last year. So all this stuff could be coming into the picture right now, which, could be the event that no one sees coming. That's pretty well, it's spelled pretty plainly in front of us what could happen. But after the fact, everybody said, well, nobody could have seen this coming. Well, we kind of could have seen it coming, actually. The Fed never raised rates this high, this fast, right? 5.5% or whatever it was in a year, basically, unprecedented. Even more than Volcker in the 70s to fight that inflation. So you had that, super, super fast rate hikes from zero. You got these bank failures last year, Silicon Valley Bank, the other banks. You got the BTFD, the Bank Term Funding Program that they used to bail out the banks. That's supposedly ending in March. Who knows? But and you got a lot of problems right now. You got this Middle East thing blowing out of control again. So, there are a lot of black swans that could come up to bite this market. And when you combine that with the price action that we're seeing here to start the year, worst start since 1999, .com bubble, anybody? Ringing some bells? And then you got the yearly, quarterly structure here using Owings market analysis. Not looking good for stocks. Be careful. All right, go ahead and look at crude to wrap it up. Crude, where are you, crude? There you are. Go ahead and look at crude here on the yearly, quarterly, and the monthly. We're not going to cover the yearly and the quarterly every day, obviously, but just first broadcast of the year, kind of fun. You know, crude's a little bit of a mixed bag. The yearly over here to the far left, this chart is a bit of a mess, as you can see. Quarterly, you know, you're in congestion here. You've got a nice pocket support. I mean, these Houthis, however you say it, in Yemen, maybe backed by, I think they're backed by the Iranians. If they keep, you know, blowing up these ships or trying to in the Red Sea, and, you know, the critical passage there, Suez Canal, on your way to the Suez Canal, I mean, that's shut down right now for trade. That's going to make inflation go up. That could keep rates higher. That could boost, you know, crude. So crude's got a nice pattern here of support, and you've got a geopolitical situation that's in favor of, you know, supporting this market here at $70 a barrel. So I think crude is a nice buy here. On the monthly, got a beautiful little flash pattern coming in here, sucking up above the near low, high connector turning point. You've got a lot of support right here into about the $69 per barrel area for crude. So crude's looking like a buy down here. Let's go ahead and look at the weekly and the daily. Here you can see the weekly is pushing up out of this support pocket pattern. I mean, probably going to head up to these highs. Looks like we're on our way there now. We've got the daily trending down. Boom. Enter congestion up on big volume. This is probably a trend reversal back to the upside. Where will there be a lot of support today on crude? I'd say anywhere down into the true average, you know, 72, 72.50. And you can see on the volume profile here, just look at how beautiful this is, right down in there to the lower end of the distribution. Just absolutely beautiful where you get that flash pattern. And now we're kind of up into a little bit of acceptance here temporarily. I think that you see, you know, you got a couple of distributions here. There's one here, but then this is your low volume area here in between the two distributions. This is probably going to continue to be pretty good support, which is also lining up with our OMA support level, which is a beautiful situation. All right, so that's what we're looking for in the major futures markets today. Go get them. Be careful. Good luck. And if I can get the live streaming figured out, I'll do it. If not, I'll record my own trading, and we will start live streaming soon so you guys can see how I apply the pre-market forecast information to my own day trading during the day. Basically, I take what I just shared with you. I've got my notes, and then I just use those, obviously the direction that I think things are heading and why I think they're heading that way, and then the levels. So for example, just to wrap it up here, let's just take silver, you know, what I'm gonna be looking for today in silver. You know, I told you we've got that low volume area. You got all that resistance up there, 2350, call it, right? So then what I do is I have my silver intraday chart here, and you know, this is for silver. I use 3000 contract bar, and this is just arbitrary, but I use it. It's sort of a formula based on the overall average daily volume. That's how I get the numbers for the volume based intraday charts. So silver here, you know, I'll just be basically looking for the low hanging fruit. You know, if I'm bearish, okay, well, we're in congestion here, right, on the intraday chart, and I want to look for some sort of a pop and a nice pattern up into resistance somewhere. The daily resistance zone here. You can see the lower end of this profile. You can see that this volume profile here is the low volume node, I should say, is right up in here where we put in those highs yesterday, coming across right there at 23.25. But I said I wanted something a little higher, right? What did I say based on the daily? I said maybe 2350. So, you know, I'd want to see, you know, see if it gets up here, and then you can see if we continue, you know, if we get up there on a nice exhaust pattern, let's say they go short, and I can see that there's not a lot of volume coming in, meaning that, you know, nobody's really accepting those prices, then it's obviously going to get rejected and head back down to this high volume area where people were happy to exchange silver contracts. So that's how you really start matching up the volume profile with the Owings market analysis. It's kind of a match made in heaven. I'm very excited about it. Still learning about it, but spent a lot of time these last couple months working on it, setting it up in Sierra charts, and now happy to share it with you guys and also use it for my own trading, obviously first and foremost, which is just thrilling. Okay, good luck, take care, and I will be back tomorrow with the live forecast, pre-market, or the live trading room later today if I get it figured out. Good luck.